On today's hot sheet, I'm discussing Zillow's latest housing market report and answering your questions. Today is Friday, October 13th, and I'm Tom Toole, and the hot sheet starts now. Welcome to the hot sheet. I'm Tom Toole. Today's callback or call in number, I should say, is 203-548-0417. Send in your questions, and we're going over the latest housing market report from Zillow. And I find these Zillow reports to be very fascinating because they look at the national trends, and we know real estate is going to be super local. So these charts here that they put together, there's a number of them. The first one talks about monthly home value changes, and the typical U.S. home value, it decreased by 0.1% from August to September. And this marks the first month-over-month decline since early in the year in February. And this type of data, 0.1% as we head into a historically slower selling season where you see less volume sell, not something I'm concerned about. This doesn't mean that home values are going down. This means that we are in a cyclical market. Historically, the fourth quarter from the 21 years I've been selling real estate is a time where there's activity in the market. Values are still ascending right now. We're just seeing them down from those peak numbers in the hot spring selling season that typically lasts from January 1st up until the end of the summer. Figure you got to lag in 60 days for settlement time periods, and that's really, you're looking at the pending date as much as anything else. So some people may say this is the sign of a housing crash or it's the start of the market going the other way. This could not be further from the truth, and that 0.1% does not really concern me. So what I do want to talk about here, the next chart, and Bobby, if you could put the second one up here, it's the annual price growth from Zillow. Annual price growth increased 2.1% over September 2022's levels. And that's up 1.3% year over year for the growth that we saw in August. And this typically is attributed to prices falling more rapidly during the same period last year. Now, let's think about what happened this time last year. Rates now, we're seeing 7.5, 7 5/8. They've been bouncing around the low to mid sevens. This time last year, rates were lower. And in October of last year, we saw them bump up the first time into that 7+% range. And that really caused a screeching halt on the market because that shock of, hey, we're seeing 7% rates, that pulled everybody out. People's payments jumped up substantially when we saw those rates come up to 7% the first time just about 12 months ago. And really, this demonstrates that annual price growth increasing year over year. And you've got to go local in these markets. I cannot stress this enough because some are going to be different than others. Thanks for the chart. This is really, really helpful here. And you look at the, Zillow Home Value Index, which Bobby is putting up there right now. Well, it shows you what's happening locally in all of these markets. And to me, this is the most critical information because some markets like Austin, Texas, one of those COVID hotspots, we're seeing prices decline pretty substantially there at pre-COVID levels. You're seeing others that are seeing incredible appreciation year over year, a normal appreciation year over year. I mean, you look at Hartford, Connecticut, 11.1%. My hometown, Philadelphia, 6.1%. Boston, Massachusetts, 6.1%. You're seeing these in a lot of the places that are the more normal markets. They don't have the same highs and lows that you do in some of these hotspot markets. For example, look at where you're seeing a decline: Seattle, Florida, Texas, down south, where a lot of folks moved to during the COVID pandemic. So this information here, looking at the annual price growth, is not surprising. It's actually predictable in my view. This is kind of what a lot of people expect to happen. And I always like to harken back to what happened in 2008. I was selling real estate then, was active in the market, and the top 5 foreclosure states were California, Nevada, Arizona, Ohio, and Florida. Sorry, I missed one there. And those were the same places that had those big spikes in the market. People were buying condos in Miami before they were even built and flipping the contracts for a profit. That's not healthy for the market. And when you see that incredible appreciation, like you saw in some of the markets we mentioned, that's what you get. So very, very, this is a predictable thing. I'm really clear that this is what the market's going to do. So let's go to the third chart. The third chart talks about housing market conditions. And what Zillow is saying here is that home buying conditions have eased since late summer. Totally agree with that. What does that mean, right? We're seeing folks get inspection contingencies accepted. We're seeing people being able to negotiate price when homes are on the market. We're seeing all the things that happened prior to 2020 in 2018 and 2019, which was a pretty good time to buy and sell real estate. So it's a normalization of the market. Price growth turned negative, and homes were selling above their list price in August, 37.7% compared to 40.2% in July. Still, again, really, really strong numbers here. And the share of listings with price cuts, they increased 23.9% in December, and listings took 15 days longer to go pending. Excuse me. So all this stuff, when you look at these numbers here, we're still looking at lower time on market than what we saw in the past. We are still seeing that when you look at some of these figures, this is a normalization of the market. And it's that we're getting back to what the market looked like prior to the 2020 to 2022 unicorn market. And this is going to be good news for a lot of people. If you're a home buyer right now, you've got an opportunity maybe to get the home that you want. Rates are higher, sure, but the home that you want with the terms that you want, which might be an inspection or an appraisal or something like that, which just really wasn't the case the past 2 years in a lot of instances. So housing market conditions definitely have eased for home buyers over the past 30, 60, 90 days. There's no question about that. Sales activity, the next chart here. So if you go to sales activity, there was a 14.8% decrease in newly pended listings in September compared to the same period last year. While sales stepped down and the activities dropped, the seasonal decline was milder than last year. This is really important. New listings decreased by 6.4% from August to September. I know locally in the market that we're in right now in the greater Philadelphia area, we've seen supply increase. That's not number of listings, but what you want to look at in your markets here, and this is next level stuff for the folks that want to really understand the market. Look at your month's supply of inventory, and that has to do with the absorption rate. So if you don't know what an absorption rate is, that's how long it takes for the existing inventory to sell, right? So you got 100 homes on the market. You have to look at the previous 6 months of activity and determine how many homes are selling per day. That'll give, and then you take that rate, if there's one home selling per day, and divide that into the existing inventory that's there right now. It tells you how much supply is actually on the market. The chart up here, this is raw data. So this is newly pended sales. And what we're seeing here is that, again, there's less homes that are selling this year. I don't think there's any question about that. And when you look at these figures and understand how all this is working, when you see a decrease in newly pended listings, but new listings decreasing by less, that tells you supply is growing. And what's been one of the biggest complaints about buyers and sellers right now? There's nothing out there on the market. So having this data, being the knowledge broker and understanding, hey, this is what's happening on the national level, and then breaking down your local numbers, to me, is one of the most critical things you can do right now to engage in conversations with your clients. It's as simple as using your OFQ script. That means opening, fact, question. We preach this all the time in our team. Hey, it's Tom Toole here with RE/MAX. I'm following up as promised. Hey, I'm not sure if you're aware, but inventory and the supply of homes on the market grew 9% year over year during the past month. Knowing that there's more homes available, would that change your view of the housing market? Are you still considering a real estate decision, right? Very value-based, very innocuous. It takes the pressure out of it and lets the prospect and the client on the other line start to talk and tell you exactly what's going on in their situation. So that's what's happening with new listings. I see opportunity here because listing supply is growing. The number of listings is not. That's very clear. Inventory trends. This is exactly what I'm talking about. The pool of inventory expanded slightly, 0.2% from August to September. Inventory is down about 10% year over year. And the peak of inventory for the year is expected to be close or already reached. If you look at housing markets, weekly housing market tracker by Logan Mohtashami, this is a must read for anyone that's out there getting serious about their business. besides watching the hot sheet every day, right? And in the comments here, I'd love to hear what else you're reading. So that pool of inventory, while inventory is down for sure, the supply is up. And I cannot stress this because we're seeing homes sell at a slower pace. And that spells opportunity for people that are thinking about transacting and they're concerned that there's not enough inventory out there for them right now. So inventory trends, seeing that anytime inventory goes up, it's good news. So the last piece of data we got here, then I saw a couple questions pop in, and then we'll go over what's happening with the 10-year. New listings are down by only 9% from last year. While inventory is down about 10% year over year, new listings fell 6.4% month over month, and there were 9.3% fewer new listings in September compared to the previous year. Now, look, here's, again, the positive news is that if you're a home seller right now and you see inventory is falling, right? As a home seller, I'm looking at that as opportunity because we know there is still demand. Homes are still selling. They're selling every single day. There is no question about it. And this is something that has got to be communicated to the consumer that you're meeting with. So last night, as a case study, I was with one of the agents on our team. Her and I were at a listing appointment, and this very same question came up. Hey, I heard spring's the best time to sell. That's when the most properties sell on the market. Now, if you look at this particular neighborhood, there's literally nothing available within 2 miles of this home, and it's a very densely populated area. So 2 miles is a long way to go. And when you have that local data, because we're talking about all this national stuff here, that local data, what's so critical there is when you show them, hey, the best news I got here is that there's nothing else available on the market right now. And these folks have a strong motivation. They've got their new place already lined up. It's just a matter of getting them down the path and helping them get their home ready for the market. So when you see something like that happen, having this data handy, knowing what inventory is doing, what new listings are doing, this is a conversation for the folks that are really serious, that are really motivated. That's going to allow them to see the opportunity in the marketplace. I cannot stress this enough. So these 6 data points here, we're looking at new listings, year over year, all this stuff. These are charts I'd be studying right now. I download them on my phone and show people what's happening. I mean, if you look at the year over year new listings and raw data, you're seeing that it's projected to trend up here as we head into 2024. This is an incredible, now it's down from last year, but we've seen it grow, right? That's what I'd be focusing on, that the right-hand portion of that year-over-year chart, and that's really going to go a long way when people are saying, hey, there's nothing available, because we know that most consumers don't have this information. So that, to me, is such an important piece of data to share. I'd be downloading these charts on my phone, showing them to people, and then look at if you scroll down a little bit more, Bobby, on that chart there, you go to first for sale inventory. Well, look at 2023, right? We're not seeing that seasonal decline like we normally do. It's actually been pretty straight line, and we're starting to see it rise ever so slightly. And that is an important trend line you want to be showing people. And it's not that they're going to buy a home now. It's not that they're going to move now. What it shows them is, hey, maybe I need to adjust my timing and have a conversation with somebody. So if the right home does become available in the next 30, 60, 90 days, I'm poised to go move on it, and I have all my ducks in a row. Proper preparation prevents poor performance. And that goes not only for business people, but consumers that are going into a hyper-competitive real estate market. So these pieces of data here, these visuals, it's third-party validation. It's going to show that you know what you're talking about, but it's not you as a real estate agent saying, hey, buy another house from me, because real estate agents get a bad rep because everyone thinks they only want to sell houses. This is educating consumers and letting them take in all the information to make a well-informed decision for their household. So we have newly pendant listings data, right? And even there, you're seeing, if you scroll down a little bit more there, Bobby, so we're seeing this newly pendant listings data. Well, if you're looking at the year-over-year data, again, we're seeing numbers kind of rise back up. And that demonstrates to me that consumers are becoming okay with the higher rate market that we're in. That they're just dealing with rates in the 7s because we can't control any of that. We can't control where rates are. All we know is where they are, and is this the right decision for someone to make a move? So there's a lot of stuff to go over here, and rates, they may continue to climb. That's for sure. That's part of Zillow's data here as well. It's just about showing them, hey, here's what's going on. Here's what's happening in the market. Knowing all of this, what do you want to do here? So, Bobby, do we have any questions that came in? I saw a couple pop up there.
We certainly do, Tom. We have Jeff asks, with buyer demand low because of interest rates and seasonality, will that push home prices down? I know we're already seeing an uptick in price adjustments.
So, Jeff, this is a great question. And this is something that I know buyers are asking all the time. We've seen buyer demand drop for sure. We've also haven't seen inventory rise. And until inventory comes up substantially here, I don't see the demand for housing to stop. I see terms changing, like we're talking about, inspections being accepted, more traditional sales terms are being accepted. Maybe there's not 10 offers, there's only 2 or 3. I don't see prices coming down here at all until we see a massive spike in inventory. If that happens, that means either people are losing their jobs, they're defaulting, or there's other major economic concerns in the country. So just because buyer demand is lower, I see no data that indicates prices are going down, and neither do any of the experts that predict this stuff. Great question.
Awesome. Our next question comes to us from Frank and Tracy, and they ask, while this is good info for buyers, how can we take this as a positive for sellers?
Great question, right? Because we all want more listings. Everyone wants more sellers to work with. And we're at the beginning here. The market's not going to do a complete 180. It's not going to be like it was during the COVID pandemic where things got turned on and it was go, go, go. That's not going to happen. This is going to be a sustained shift in the market over time. And for sellers, even though inventory is upticking a little bit, it's still very low. And this is where you got to know your local numbers, Frank and Tracy. So I know in our marketplace, the suburban counties, we have a 1 month supply of properties on the market right now. That's extremely low. So whether you're at 3 weeks or 4 weeks, doesn't really matter if you're a seller. And you know the data and can command that and say, hey, things are trending in the right direction. We might want to move up our time frame. And we also know that, during the spring, there's going to be more people that list. And when rates come down, because they certainly will, no one knows when, you're going to see more sellers come off the bench. So there's still opportunity in the market now, despite all of this. This is just the very beginning of the change. And when you make it about the person's goals and what's best for their household, and you have that conversation with them that, hey, we're not buying a home right now. Let's just keep our eyes excuse me. Let's just keep our eyes peeled because we're seeing more stuff come to the market. That's a very different conversation than inventory's up. Let's go transact, right? So I'd be talking to sellers about what's going to happen and saying, hey, we're still in a low inventory market now. Let's take advantage because the best time for you as a seller to have your home on the market is when the neighbors don't.
Fantastic. We also have a great comment here from Rebecca talking about how to use this data with potential clients. And she says, didn't think to download it, but this could be a great way to get somebody's phone number. Would it be okay if I texted you this data point? What's your take on that, Tom?
I love showing people these charts. We do this at our team all the time. We tell everyone to download these things on your phone because what happens is when you're face to face with consumers, Bobby, right? And Rebecca, and what happens here is that they ask you these questions. Hey, are prices going down? Hey, what's going on with inventory? And instead of saying, hey, here is what I know and giving them facts, which is good, right? Saying here's what I know is way better than saying here's what I think. But showing them a chart and putting it right in front of their face and saying, hey, here's this chart that was put together by Zillow. If you've heard of the company called Zillow, which everyone has, and they did a national study on all of this information. They're showing this is happening nationwide. And then take it one step further and say, hey, here's what's happening in your county, in your local marketplace, wherever you're meeting these people. And having that information available as well, it's a great way to validate what you're saying. And all you're doing is helping people understand the market because most consumers, they don't know what the heck is going on. I mean, they really don't. I mean, people move every 11 to 12 years now. That's up massively from where it was a decade ago, about 7 years. Think about how different the world was 11 years ago. I mean, things change dramatically, and it's our job to guide people and educate them. So I love that, and I think it's a great way to get someone's number as well.
So last comment here we have before we go to the 10-year is by, I'm assuming, an agent named Eric Simon. And he said, ask Tom what 8 times 7 is, but he doesn't get it.
What 8 times 7 is? Well, I mean, it's clearly 56, but that's not the point. I'm not sure where this genius is going here. 8 times
Well,
7.
We'll have to get Eric to comment the answer to that joke in the comments.
Let me get my
Tom,
calculator here and make sure I did this math
just
right,
make
Bobby.
sure.
Yep, 56. Yes, my Catholic school education of being beaten down to memorize multiplication tables finally paid off for me in my professional life. So there we go.
Finally. Well, let's take a look and see what the 10-year is doing here as we land the show.
So let's see what we got. So it looks like the 10-year is at 4.612. That's down 99 hundredths of a point so far today. And I mean, we're going to see the 10-year remain pretty stable is my guess until the Fed comes out and says something. I mean, we had a lot of talk this week. Lawrence Yun came out and said the Fed needs to stop raising rates. The CME group, they do a really nice job of predicting what the Fed is going to do at the next interest rate meeting. And they have which is in 19 days. And right now they're pegging it at a 90.8% chance there's not another rate hike, although there's a lot of people that are members of the Federal Reserve that anticipate there will be a rate hike before the beginning of the year. I mean, I'd like to see the 10-year continue to come down a little bit. That would be, there it goes. Just tick down more. My prayers have been answered here. So,
and you and Lisa go into this more in depth in terms of the FOMC meeting on the episode of Knowledge Brokers that's coming out today. Am I correct on that?
Yes, it is. Lisa is wearing the Michael Jackson Thriller jacket in this too. So it's a must-see for Halloween for anyone that likes the spooky season.
Beautiful. Let's bring it in for a landing, Tom.
All right. Well, that's what we got this week for the hot sheet. So if you want to subscribe to BAMX, I think this is all, and you want to sign up, use the link below and use the code TOOL23. That's Tool with an E, 23 to get 10% off your subscription. You've got people like Tom Story on there who have mastered YouTube. I got the chance to see him at BAM Camp, Bobby. I took pages of notes from Tom Story. And this is someone that does a lot of video work. You get to see me handle objections. You get to hear Eric Simon do multiplication and give you Instagram tips. This is a wealth of knowledge here at BAMX. If you want to invest in yourself and invest in your business, sign up at the link below and use the code TOOL23. That's Tool with an E, 23 for 10% off your subscription.
Awesome.
We'll be back on the hot sheet.
Everybody.